Investing in gold can be an attractive option for investors looking to diversify their portfolios, hedge against inflation, or simply enjoy the prestige of owning gold as a commodity. Today, technological advances have created various ways to invest in the precious metal. In this video, you'll learn how to trade gold CFDs and what's the best time to choose to start trading gold. Let's look at trading gold CFDs. CFD trading has many advantages compared to investing in physical gold, such as low fees and the opportunity to use leverage in particular. With CFDs, you can track the movements of the commodity or the underlying asset without owning gold in a physical form. The process of trading gold CFDs is usually simple and convenient, as the world's top brokers enable gold trading online through their apps and platforms with a trading account. On trading platforms, gold is traded with the code XAU, and one of the most popular exchange interest rates is denominated in US dollars per troy ounce, known as XAU/USD. XTB offers gold CFDs as well as ETFs and stocks of gold-producing companies. You can get started on trading gold on the XTB app or our platform online. So why trade gold CFDs online? Firstly, accessibility. Setting up a CFD account is less time-consuming and more cost-effective than purchasing physical commodities. Secondly, liquidity. The high trading volume gives gold CFDs high liquidity on gold markets, meaning gold CFDs are less expensive to trade compared to their financial instruments, and the commissions charged are usually very small. Number three, the ability to go long or short. You don't have to worry about timing your trades, as high liquidity means you can capitalize on both rising and falling markets. Number four, stability. Since traders can benefit even though the markets are falling, gold CFDs can offer traders some stability and a chance to succeed even in unstable markets. Number five, leverage. CFDs are leveraged financial products. You don't need to deposit the full amount required to open a position. Gold CFDs tend to come with high levels of leverage, which can translate into low margin requirements. Number six, volatility. The gold market is highly volatile and its price tends to fluctuate more than traditional currency pairs, possibly giving traders more opportunities for success. What's the best time to trade gold? Gold may become popular during high inflation periods. As rising inflation can make people concerned about the value of their money, gold is expected to serve as an inflation hedge. Gold is also regarded as an asset class, which could help investors build a balanced portfolio. This idea can be particularly compelling for risk-averse investors, as portfolio diversification may reduce risk and volatility. Subscribe to XTB to learn more about trading and investing.